Of course, I'd end the year with this stock. Hello fellow investors, last trading day of the year and my second last video upload in 2022. Yes, there'll be another one and it's a very important one, so you should watch that as well. We also reached 100 subs and 10,000 views, guys. Crazy. I know. Thank you. Thank you. I don't know what to say. Maybe look beyond my grammar, enjoy my grammar a bit more, and I wish my every subscriber a very prosperous trading in 2023. Just my subscribers. Not unless you subscribe now. Anyway, onto the video. 9 months ago, I uploaded this video where I revealed what stocks I was holding at the time. 5 of 8 I've made money with, ranging from 10 to 30% per trade. However, 3 of which I lost. Yes, I'm a very normal investor slash trader. I win more but I lose some. First very minimal loss is the XN, which is less than 1%. I just didn't like how it was trading. It runs up for 5 days only to give up all gains in 2 days. So, yeah. Second is my biggest percent PNL loss. Not only this year but up to date. Hot 60%. Crypto is crazy, man, but this is a nothing burger really. I'm more pissed off by the percent PNL than what I lost. It's a massive number, 60%. It's embarrassing. Anyway, it's crypto. Tried it, didn't work. Move on, and that's why I would never tell anyone to invest in crypto. I think it's a more personal thing. It's not an investment. You should be asking other people if it's a good idea or a bad one. The answer is always what you want to hear. The last one is Intel, obviously. I lost 15% in Intel and it was a sizable amount. I cut losses on this one because I knew it will only get cheaper. That's why I sold. So far, I'm right. And so far, I have not been buying yet. And here's why. At the time when I was a buyer of Intel, I was buying it at the PE and price of free cash flow basis, like I would on any normal semi or tech stock. But that thesis has since changed when the spending reached the books, their financials. They want those fabs to grow that segment of the business. No, Intel is not dead. Sure, Nvidia and AMD, they're gaining market share, but it doesn't spell the end for Intel. I sold and cut losses on this stock because I was sure it's only going to get cheaper. One, basically, they're back to being an unprofitable semi-company as they continue to burn free cash flow over the next quarters. Obviously, the stock price should follow. Two, they're going to dilute more shares to raise capital for expenditures and of course to sustain your beloved dividends. This is going to be the same with Para, Meta, and other companies who exceed the margins of which they earn by spending. This is why, in my good conscience, can't tell my investors to pay for the same metrics for these stocks. We can't value them on their earnings and cash flow for the time being, unless of course they decide to step back or cut back from spending. This is now trading on the books basis, the PB. It now comes down to how much you're willing to pay for their equities. Here's Intel's valuation summary. Yes, it's cheap now. It's cheap at 50s, it's even cheaper now. This valuation summary runs on PE metric, that's why it's undervalued. But again, we can't buy Intel on PE and price to free cash flow now. This is Intel's charts, the fundamentals and the price investors paid for in terms of PE, price to free cash flow, and PBs, from the highs and the lows of the quarter. Black lines are my fair value for each quarter, orange lines are dividend yields. As you can see, going back 5 quarters from now, my fair value would be above $50. That was when the thesis was buying the stock for the PE and the price of free cash flow. If you were a buyer of those prices, I understand. If you're DCAing until now, I understand. You wanted to hold those shares for the dividends. If you cut losses like I did, even better, because you didn't have to ride this much selling. And yes, I believe it can go lower. The multiple of PE I used here was just 12. It should be at 20s. Back when the PE was the metric it was trading at. Now this is my fair value, the PB of 1. Look at the free cash flow, guys. The jump from 17 billion down to just 9.6 next quarter. Then negative 1. Then negative 13. This is why from this point forward, you should value Intel on their books. Look at their equity and their declining revenues. These numbers will decline for the next quarters to come. The demand, the supply constraints, and the spending thing, basically an attack from all corners for Intel here. They'd be diluting shareholders, raising capital, issuing debt. The equity would just look bad, is what I'm seeing going forward. The same with their revenues. Now, last quarter it bounced from 1 PB here. I did buy there because Again, I don't buy at fair values. Maybe I should have and swing traded it, but it's in hindsight now. Should it bounce here again at 1 PB for this quarter? Sure, but I won't be buying it here still. I want a margin of safety from those PBs. Start from 30% down to 60%. That's my margin of safety for all stocks, 30 to 60%. It could just trade sideways from here. I think 30 would be the highest band here going forward, but I'm open to the idea of this stock trading at $20 and below. This is 7% dividend yield at $20.86. This is 10% at $14.6. Can we get there? Honestly, I don't know, but I'm open to the idea. I only react to their financials, especially their equities. That's what I'll be paying for. I want a margin of safety from those fair values. Current quarter's fair value is 24.2. Again, that's 1 PB. Maybe I'll start buying at $17 and trade the stock from there. That's 30% margin of safety, meaning I'd only be buying 0.7 times book of Intel. The margin of safety depends on you and how much you're willing to pay for Intel's books, your risk and return requirements, but you have to be conservative as the likelihood of these numbers getting worse going forward is high. The higher the margin of safety, the better. I wouldn't own this stock just yet. I'd trade this. I think we can get it at a much lower price. Long term going forward, yes, I think Intel will do just fine. DCAing on this stock is just fine. Just do it below 1 PB for each quarter. If you think Intel will still be profitable in the next 10 years, then yes, I do think it's a multibagger from here, but obviously I can't tell for sure. That's too far ahead. For now, it's time to accumulate. It's time to get interested in the stock. Just don't buy at whatever prices. Know what you're paying for the stock. Enjoy the dividends, enjoy the ride. It's going to be bumpy, but I personally think it's headed the right way long term. That's my take on Intel stock. I've included it in the list of stocks only available on Patreon. If you want to DCA Intel, follow us on Patreon. Also, subscribe to the channel as well. Happy New Year, everyone. See you next video.